We've learned what a stock write-down is. Now we need to realize how to record it. So stock write-down was when the net realizable value fell below the cost. So let's have a look here. We've got cost of some stock is 1,000. So we think we can only sell it for about $700 today. So that is going to get recorded in my general journal. I've got what's called a stock write-down of $300. In the previous video, we said that's going to be an expense. So when I have an expense, it's always a debit. So I will do a debit of $300 as an expense. Now, what's that going to do to the value of stock? At the moment, stock has a balance here of 1,000, but I need to get it down to 700 because the net realizable value has gone below the cost. So what I better do is a credit to stock control, and that'll go in there. And if I balance that stock control ledger out, that equals $700, which is what we said the situation was. Better do a narration. So I've written stock write down. In this case, it's 10 bikes to the lower of cost and net realizable value. Let's just have a look at that narration. What are we looking for enough detail here? We want to start with what this is for. Why are we making this entry? So we want to write this is a stock write down, or maybe we're lowering it to cost or net realizable value. We also want to write the type of stock, in this case bikes. We want to write the number of units, in this case 10. And then we definitely need the memo number. So in the example you can see it's memo number 1. Why is it an expense? Well, we said an expense is either an outflow of economic benefits or a reduction in inflows. It's either going to decrease assets or increase liabilities. And the overall effect is it's going to decrease owner's equity. So let's relate that to a stock write-down. The first characteristic was it's actually not an outflow of economic benefits. So I'm not actually losing the stock. The stock's not leaving the business. What I'm saying is I'm going to be able to sell it for less. So the inflow I'm going to get is less. So I have a reduction in inflows. So the inventory will actually be sold for less than its cost. 2, it's going to decrease assets. We just saw which asset will go down. It'll be stock control. And the third characteristic is the overall effect will be a decrease in owner's equity. So let's have a look at an extended example here. Let's say we've got 200 umbrellas in the middle of December, so it's going to be hard to sell them because it's summer. They cost $10 each. So I've got 200 at $10, that's a total of 2,000. I'm going to have a stock control ledger with $2,000 in it there. Now, stock card, that would say balance, 200 units at $10 each, which is $2,000. Gets to December and it's summer. I can't sell these umbrellas. I'm going to lower the price to $8 and I'm going to take a newspaper out, ad out in the newspaper for $200 saying come and buy these umbrellas that are on sale. So it's a $200 advertisement for 200 umbrellas. So the cost was $10. The net realizable value was defined as the estimated selling price less any selling, marketing, and distribution costs. So I have got an estimated selling price of $8. Now to sell these umbrellas, I've got to take out this ad. The ad's going to cost $200. The umbrellas, there's 200 of them, so that's $1 per unit. So that must mean the net realizable value is 7. So I'm going to pick the lower of these two values. That's how we always value inventory, lower of cost or net realizable value. So my choice is 10 or 7. Well, I'm obviously going to choose 7. That'll give me a stock write-down of $3 for every unit. So what I need to do is get the stock cards to change. On the left is the cost. I've got 200 units. Now I've got to write each one down by 3. So that's 200 units times 3. That's a total stock write-down of $600. So I've got to get the cost from 200 at 10, which is 2,000. To the net realizable value, which is 200 at 7, which is 1,400. So there's $600 difference there between the two. So I'm going to do that in the general journal. I'm going to do a debit to stock write down of $600, and then I'll do a credit to stock control of $600. I'll do my narration. I've got a stock write down, 200 umbrellas to the lower of cost and net realizable value, and I've got my memo number in there as proof of this transaction. Let's have a look what this the effect of this on the ledgers. I do a debit to stock write down. Stock control at the moment has that balance of $200. Well, I'm going to need to decrease that to $1,400. How did I do that? I did a credit of $600. So looking at that, what's the impact on the stock card? So what I've got up here is here's the original cost, 200 at 10 for 2,000. Got to get them down to 1400, which is 200 units at $7. At the moment, or how did I do that? Sorry, I did that with this entry here. But at the moment, my stock card shows up 200 units at $10. I've got to change this stock card. So how will I do that? Well, I'll make an entry on the date, which is the 31st of December. I'll do the reference, which is the memo number. Am I going to use the in or the out column? The stock's not actually going anywhere. I had 200 umbrellas yesterday. I've still got 200. So whilst they're not literally leaving the building, I guess a part of them is $3 of every umbrella is going. So that's going to go in the out column. 200 umbrellas, $3 of those umbrellas is gone. That's a total of 600. And that must mean if I had $200 units at 10 here, but of those 200, $3 is gone. Well, that must mean I'm left with 200 umbrellas at $7, which is 1400, and we can see that matches what we hoped it would be up here. So that all matches up. So it's a long process, but we got there. We got our stock right down to get the stock down to its current net realizable value.